Looking at the weekly 30-30 trading list on the ASX, the market has tanked and fallen significantly. So we're looking at the momentum leaders, which are hard to find in this market, as well as those launchpad companies. They're the ones that are building some sort of base, which at the moment looks like they're just maintaining swing lows. Gary Galvez filtered through the charts, looked at the companies and picked out the ones his favourites for the week. Good morning, Gary. How are you?
Yeah, I'm good, Chris. Yeah, this is probably the most toughest week I've had to go through the list, actually, trying to find sort of stuff there. Obviously, we've got the market sort of in turmoil, sort of falling pretty hard here. So, so we've got US and Aussie equities both coming off pretty hard. So most sectors are under pressure here. So they're, in terms of stocks that are holding up quarterly and weekly, it'll be tough there. Particularly you still got a reasonable strength in the quarterlies, but the weekly list is a little shakier. It's probably the shakiest list I've seen, actually. So, but that should be the case, really, I guess, if the market's under the pump here.
Yeah, well, it definitely is under the pump. And for those of you who follow your weekly report that we record on Tuesdays, you've been bearish for some time. You've been talking about the bearish ETFs, and no doubt you've probably been taking some profits off the table as the market's been hit. So, in a nutshell, is that kind of what you've been doing this week?
Yeah, I haven't actually taken any profit off the table yet, actually, Chris. So that's sort of, I'm just starting to sort of think, should I be taking a tiny bit off here? I've still got my target, which is a little lower here. So can't see anything but lower levels. But look, if I take a little bit off here, that's all I'll be taking off. Definitely starting to wade in some stocks on the, I think the Aussie market historically sort of holds up better than the US. So I expect us to sort of try and bounce off our lows here. And while the US is probably finding slightly deeper lows, you got to remember last time the Nasdaq got crunched there 80% there in 2000, 2002. I think we only came off like 14-15% in that period. So we're generally a much more resilient market just because we're not holding those growth names or too many of those growth names in there. So definitely sort of should be starting to look at some of the quality stocks in our market there. So that's where I'm looking at the moment. But let's get onto this list, eh?
Yeah, so you're buying the quality ones. We're looking at the momentum ones, which might not tick both boxes, but you can walk us through the charts of these most powerful companies on the ASX at the moment from a price gain. Looks like you've got GAL number one. So how do you view that chart?
Yeah, so still not bad here, actually. So really, as I say, this is the number one stock here. The thing you've sort of got here is you've potentially got a little bit of a triangle sort of occurring in here. So you've sort of obviously had a bit of a spike high, but then now we're sort of tightening in the range here. So each sort of, so we're just sort of seeing this sort of consolidation there. So seeing not bad volume on that little run there. Not bad volume on there. Obviously good volume running into the highs as well. So you probably want to see price, Good thing is I haven't seen too much volume on the pullback here. So obviously still not too much selling here. So we can get a little bit more, just sort of stays tight in here. Now I think then pushes above that, 172 mark there. That still looks okay. So I know it looks a bit longer.
Thomas Bulkowski calls the high and tight flag.
Yeah, I guess so. Yeah, I think it's, obviously the percentage marker is, there's different, people use different markers there, but I think it's, sort of roughly 80-90% move. I know some people like to see 100%, but I think it's around sort of 80-90% sort of gains there is considered pretty robust there, and then a bit of tight formation. The good thing here is you're just seeing a nice tight consolidation. So yeah, it does. Yeah, it does have that sort of high tight flat sort of appearance about it there. But again, we're just seeing this contraction there. That's the key, is they're just seeing the contraction on low volume here so far. So that's still looks all right here. So yeah, I mean, look, I wouldn't want to see it maybe break below that 123 level. So probably my stop would be probably somewhere down in there. But if consolidate a bit more in here and then we pop through the upside there, no reason why it can't have another leg up here. Probably is a bit late maybe, but you just never know with these things. We show you with momentum stocks here, they really can run. So yeah, can looks all right. Next on the list here, actually, I saw was Silex there, SLX. So it's actually had a pretty good run there. So almost like a bit of a cup and handle in here, isn't it, Chris? So it's probably a little deeper than you'd like to see, but not too bad here. I think that started to see a little bit of volume come in here, which was not a bad sign there, pushing through the pushing through the handles pretty positive as well. So that has continued to kick on. There's actually been pretty strong volume on this day on through here. So that looks a bit robust. It's obviously gone back to near the old high here, so it's probably too late to be coming in here. But yeah, just an interesting little chart pattern there. I say normally you like to see these a little shallower. Not sure what the percentage and stuff is there, but the best couple of handles are the ones where they're a little less shallow, just have smaller corrections, but still an interesting pattern there. The one that I really like here actually that we've highlighted the last few weeks is this PolyNovo. So we've sort of got our low in March, we've got a sort of high low here. Look at the volume that's sort of come in here. Since then we've sort of gone in a tight range. Looked like it actually broke out the other day. Basically went above this 120, so 133 high. So only went like a cent or two higher, 136, then kind of failed. So that volume's a little bit of a worry there, but often finds when you sort of start building here, then you do make a trigger. Sometimes you get a little bit of you can just get a little
throwback.
Yeah, your little throwback. Yeah, just sort of a little trap there, just sort of flush out some of the, sometimes I reckon half of these, if you look at half of these sort of breakouts there, half of them will flash back for 2 or 3 days and then start to turn up. But it's not a bad sign here so far today. The volume's pretty light, holding up quite well. So I think if it actually can sort of stay tight here for the next couple of days, it's got a chance of going on. So that's one that's actually really held on really well here. And just the volumes is really impressive there. So that's one that I keep an eye on here. I think that's looks really interesting. One that sort of caught my eye here was some of the coal stocks there. So at this stage there, with the stocks like Whitehaven, which has been the leader there, that's staying above the 50-day moving average. That still looks okay there. A little bit of higher volume in here, just to keep an eye on there. So that's potential sort of distribution there. Not obscene volume there, but just a bit of caution there. But the reason I say I'll be watching this closely is that quite a few stocks in this sector here. So there's New Hope that actually has broken below the 50-day moving average. So look how once this has turned up again here, didn't stayed above the 50-day average the whole time, just starting to sort of come through here now, and we've crossed the 50 sort of twice here now. So just be a bit cautious about that. I think Yancoal again has crossed the 50-day moving average again. So it's really, once it got going here, it never basically closed below the 50. So today it could be there, and it's just got some sort of high volume up here as well. So this is a little bit of possible distribution taking place as well. So just a few of those coal stocks, I know it's been a strong sector there. No real reason, so it doesn't seem like any real reason to get out there, but price action's sort of showing a little bit of distribution. Crossing the 50-day moving average, that's just a bad sign for me. I'd be pretty careful there. So we've just got a couple of stocks in that sector crossing their 50-day moving average. So look at that, Coronado's already gone there. So pretty decent distribution as well in there. So yeah, everything's telling me to be very cautious about the coal stocks. They've had a fantastic run here. They all can't go up forever, as we know. At some point, they'll correct and either go through a bit of a sideways pause or go through a decline. So there's a few signs there to be cautious.
That fits in with a lot of research that Gil Morales and Chris Karcher did, and also Thomas Bulkowski independently. The Chris Karcher and Gil Morales used the pocket pivot, and exactly what you're saying about the 50-day moving average. If the company has maintained around the 10-day moving average for 6-8 weeks, then they move to the 50-day moving average as their stop loss. And as soon as it breaches that 50-day moving average, from their studies of when they worked with William O'Neill and then looking back a couple of decades, they found that the 50-day moving average, once that breaches, like what you've got there on the screen, they exit stage left, themes over. And that kind of fits in with Thomas Bulkowski, what he called the Holy Grail, where he found that the themes, when they were leading the market, in average, they would hold the first position for 45 trading days, which is about 10 weeks. So it kind of fits in where what you're saying. They've had their time in the sun. You've been saying for a few weeks now, this rally is a bit long in the tooth for the coals. And so you're seeing across the group, they started to fail at the 50-day moving average. So that's the overall concerning sign for you.
Yeah, I think. Yeah, I think Whitehaven's the only one that hasn't crossed below the 50 moving average. So that's the concern there. We've seen there with Coronado, once it did cross, we really started to come off. So just show me that. Yeah, obviously that's Whitehaven's probably the leader, the strongest one there. So maybe comes off last. But you've got the rest of the sector starting to peel off here, so I'll be pretty cautious there. So I just think that's so we've seen all the sectors, the hottest sectors, at some point they do tend to cross. And I think the 50-day moving average is a really, in my experience, it's sort of nothing good happens below there, and all the good stuff happens above there. So it's a really, I actually over the last sort of 12 to 18 months, it's something I've looked at more and more and more, and it's become more and more important the more I look at it. So other stock there was LKE looks pretty interesting. So we obviously we are below the 50-day moving average here, but we are starting to there's been some reasonable volume coming in here, Chris. Sort of even this sort of little drive here, some okay volume there. So we obviously need to break back above it, but gone back above one little swing high, which is kind of positive, but still a bit early. But we're sort of the trend's still pretty robust. This is a little bit of a larger correction, but really in terms of it's still sitting on top of the previous high there. So I've seen here before, some of these stocks can have these sort of larger corrections there. They can continue to go on. That I was just trying to think of what one of the sort of strongest growth stocks might have been WiseTech or something like that, had something like this, or it might have been Macquarie, had a decent pullback, but then continue to move to a new high. The key thing there is not breaking below the previous swing high. So that still looks sort of okay here. We just want to see it sort of build a bit more. So
I guess with those WiseTechs and Macquarie, once they pull back, and if they sit on that swing high and then they keep rallying, when we look at them on the chart, they pale into insignificance because they just get dwarfed by the scale, don't they?
Yeah. I think it might have even been something like, I think Temple and Webster as well, when it was sort of having its run as well, had a few large corrections there, but they managed to stay above the previous sort of swing high, and then so really they maintained the trend. That was sort of more important. It's sort of, if you overbalance there, have the biggest correction, and you break below the previous swing high, then that's when you're normally in trouble as well. So I always get concerned about what I call an overbalance of the trend, where you have the largest correction of the move that can tip over the trend. But if it's still sitting on top of the previous trend, then you've still got potentially still got a reasonably strong trend. So that's not so negative there.
Okay, that's good news for those who like Lake. So
that's right. So, and the volumes are pretty handy as well. So prices come back quite a bit here, and you're starting to see a bit of volume come in here. So that's always not a bad sign as well. RMI was actually sort of one that looked pretty similar to actually GAL. Actually, sort of had that. So it's got that little triangle up there as well. It's obviously a smaller share price, but again, you might be able to argue this is another little high and tight flag there, a little little contraction sort of pattern there. But we've sort of had some pretty good volume all the way up in here. We saw a little bit of distribution volume, which is probably the only negative on there. That was, see how that bar there was pretty big. That's probably the biggest bar of the
range day of the whole rally.
So sometimes when you run, and then all of a sudden you draw the sellers in like that. It's almost like the insiders have been waiting for their day to get out. So that's a bit of a negative. But look, it has sort of bounced here and contracted there. But you want to see a bit more contraction, and then maybe break through there. But that's probably not as good as as GAL, just because that should really highlight to us a little bit of distribution taking place. So there is definitely some sellers up here who want to sell this, and that's a pretty large sell bar as well. So from my experience with the insiders, just got to remember, sometimes these insiders got a lot of shares, so it's hard for them to sell. So if they're holding, if they're holding 5 or 10% of the register, or even if it's like 2 or 3% or something, if the insiders who been maybe involved in this company are setting it up and getting the people and the assets and all the rest of it, if they want to sort of sell, it's hard for them to sell. So usually they're waiting for a catalyst, like a news catalyst. So you're almost waiting for some good news and some news. So you're basically waiting for buyers to be drawn in, and that's when they'll come into the market. So oftentimes they're looking for a catalyst to actually liquidate. So that's why sometimes you think, oh, it was such good news, but the share price sold off. So that's because the insiders have been waiting for this good news, waiting for enough liquidity to come in so they can get out. So that's often what happens here. So just got to keep that in mind there with these sort of smaller names.
But there's definitely big volume, big range.
Yeah. Last one there I got there was GrainCorp again as well. So just noticed a few of these sort of ag stocks are sort of showing a little weakness as well. So just again, we've gone below the 50 maybe. I know we sort of poked there and bounced through there, but just starting to see a little bit of distribution there. I think AAC was sort of one that I was watching as well. I managed to sort of hold up here, but again, this is a sector that's been pretty hot here. Those elders has come off, so you just got to be careful with some of these ag stocks as well. I've had a pretty hot run here. Might just cool off a little bit there. So nice GNC and broken through the 50-day as well, and just the volume is probably the biggest concern there. There's some reasonable volume coming through there.
I think it was just in the last month or so that Australia's launched the ag index of ag stocks. So we've got mining, we've got banking. So these things normally happen after they've gone for a big run, don't they?
That's right. Yeah. Actually, one stock I missed actually on the list was Bubs, actually, which is pretty high up on the list. Quite like the look of this here because it's really now sort of had this pretty good news. Obviously, drew in all our punters sort of who just buy on any good news, got caught on this great, Joe Biden announcement,
cool.
Which is cracking for the company. But then obviously, these things cool off here, a little bit of a pullback here. But we've had a nice little ABC in here and dried up here as well. Main thing there.
Can you just spell out that ABC for us, please?
So this is sort of like I like to sort of see like a one leg down, a little bit of a bounce. This is referred to as a B. Then you see, oftentimes like the most common correction is like a 3-wave correction is this sort of A, B, C. Usually A equals C. So often the most common is for the first leg to equal the second leg. That's the most common one, but it doesn't always work out that way. But more importantly, if you do sort of see this little 3-wave pullback, and then we can see here that, we had a bit of selling there initially, obviously probably a bit of profit taking. Then we had a little bit of a bounce and then a little bit of a drift in. See the volume dried up here? We saw a little bit of a spike here the other day. I actually thought this might have been it the other day. I was thinking, maybe I should have bought this day here. But it's managed to sort of grind back a little bit there. The key thing there wasn't too much selling. See, the volume was pretty light. And now we've got a bit of volume here. So it's starting to sort of stabilize here. So, probably sort of think anything around 60 cents is probably not too bad here. That sort of news is probably game shaping for Bubs as well. So I know people might say it might be one off there, but getting access to the American market, potentially that opens a few doors for them longer term. So it could be quite positive for them. So around 60
half the
cents.
trouble for Australian companies is getting the distribution channels into the US, isn't it?
Yeah, that's right. So it's quite amazing publicity, quite amazing contract there. So also I think Aussie sort of ag is got a pretty good name. So I think if it's coming from Australia, I think it's usually viewed as pretty clean. So so that's it for the momentum list. Now the tougher one was the weekly one there. We had LKE on the short term one. Obviously that's probably there's probably not many stocks that are positive, but this is one that has sort of stayed positive, and that's a good sign in a bear market. Is if your market's under a lot of pump and you're holding up pretty well, that's generally a pretty good sign. One that I did see, which was sort of pretty small here, so it sort of made it on the list here, probably just because everything else is cooled off here, was this XTC there. So definitely a little small, obviously being a 1 cent stock. So I wouldn't have normally put this in here, but I just I like this. Look at this volume there, Chris. That's pretty good volume going up here. And this is sort of almost like a, starting to be like a contraction pattern as well. So this is sort of, this is pulled back here, pretty light volume. All the volumes flooded in here, had a pretty strong move, gone back up to the high. And then we pulled back here and we're sort of holding off the highs as well. So this is not coming as shallow. So this might be sort of one to watch out. It's probably too small for me personally. I probably wouldn't trade it there, but we come back in here.
It's a good example of the patterns that you do trade.
Yeah, that's right. So just interesting pattern, just interesting volume. It's sort of, it's got, if this wasn't a 1 cent stock, I'd be more interested. So, but the chart doesn't look too bad there. I think LPM was one that's had a bit of a jump here, probably just because it had that little jump there during the week here. So it's a bit early to tell here. It's in that lithium space, which is probably, I'd be careful about as well. I think it's a little late there, but had a bit of a jump. But that's one that sort of came up positive there. Personally, not for me. Airtasker was on the list there, probably just because it was sort of, yesterday was sort of holding up better than most things, even though it's really down for a week. It's actually sort of held it. I've only sort of highlighted this one because I actually think this is pretty interesting. I do actually sort of, this stock has ground down pretty hard there. So starting to see volume a little bit there, but again, this, there's nothing really to like in here unless you really like the stock here.
Well, that's a good example of what you said earlier. Nothing good happens under the 50-day moving average. Look at that green line.
Yeah. Well, so once it's crossed there, it's remained there the whole time. So yeah, amazing, isn't it? So it's not a bad tool there for particularly these sort of growth stocks as well. But what do we got there? AR3 was the other one that sort of had a little bit of a bounce off the lows there. Sort of, again, that's probably nothing earth-shattering. They're not great volume and stuff there. Just showing a little bit of strength there, obviously off the lows there so far. The only interesting thing is for me is that this is the float price where she started. This is obviously where it opened the first day. I just noticed with some of these new floats, they get hot early, then they cool off as the news dries up, and they often come back and retest the low, which it's done now. So this is oftentimes a place where it can bounce from. It's a little bit of what I call a little IPO pattern. It's just sort of something I've noticed over the years. It's something, an observation that I've seen over and over and over again. Doesn't happen in all stocks, but it just happens with a lot of stocks. So all that hype early, all the marketing and gets everyone pumped up, and then like anything else, just sort of the news flow will stop, and then the selling will begin, and then they come back and retest the low, and then this is a point where sometimes they can get going from. So that's the reason why I sort of brought that up there. I think it's worth watching there, just because it's one to have a look at. The other one that sort of caught my eye a little bit, not just because the trend is ugly as, but the volume here is massive. So we're starting to see some big lines go through the stock here. So BWX is in that's that healthcare, health and beauty sort of stock. Was it? I think Suke, and there's some reasonable brands in there. Obviously, it's been, I think, had a few downgrades and it's come off quite a bit and got hyped up, and then it's been sold off quite a bit here. But it's been, been some massive volume, been some massive lines go through here. This is pretty interesting, sort of down here, seeing these massive lines of volume there. So it could be exhaustion of sellers or maybe some new buyers coming in. But oftentimes big volume sort of can, for me, it's either, is it a sign of distribution or is it a sign of accumulation? That's the question you got to ask yourself. And considering the size of this downside, the scale of it there, it's pretty interesting. I actually had looked through the announcement there. It's pretty messy there. Sort of, some of the major shareholders they're buying one day and selling the next, and then they're up and they're down. So I couldn't sort of see who was sort of building a stake and who was getting rid of a stake there. So seemed to be no sort of clear guide there. So maybe a little less excited just trying to read through the news there. But that volume there is pretty interesting. That's definitely one just to sort of keep an eye on there. Interesting that it's actually having a decent move here on this volume there.
Big volume today.
Yeah. That's really it. Really, it's a bit of a tough list there, but I think it's just just indication of the market being very tough, and but hopefully the next couple of weeks we should find a bit of a low, hopefully, and then we can get back to making some money on the long side. Got to cash my shorts out soon, but yeah, there should be some opportunities, I think, with all this carnage.
That's a good point to say for anyone who wants to follow you on the Tuesday videos, which is your weekly report. You've been short, but you will be buying at some stage, as you're saying. They can click on the right-hand side of the screen there and see your weekly Tuesday videos. And then also, if they want to learn more about volatility contraction patterns and those type of trading patterns that you use, they can also click on the other video. And on that note, we'll probably wrap for the week. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.